Today on this episode, China's Bitcoin exchanges suspend margin trading. Hello Bitcoiners, this is Eugene here. Today is the 19th of January, and I'll take this opportunity to discuss quickly on the last week's news about China's Bitcoin main exchanges suspending their margin trading. I refer to the news on from Zero Hedge. As you may have heard, uh, China's main Bitcoin exchanges, mainly haobi, BTCC, and OKcoin, they are suspending margin trading. This news follows the previous news that the central banks of China was visiting the main Bitcoin exchanges. These visits, so-called visits, have caused many Bitcoin traders to speculate that the Bank of China would want to start regulating Bitcoin. Again, this is, I would say, they are just mere speculation. As Bobby Lee of BTCC was saying that these visits are mainly just research on the part of the Bank of China. Now, after the so-called visits, then this particular news that the Bitcoin exchanges are suspending their margin trading. So what is this Bitcoin margin trading all about? Basically, it is the same leverage or derivative trading that we see in Forex or in binary options. Just to explain what is leverage trading, basically, I'll give you an example. If let's say a Bitcoin trader was to have $1,000 and purchase $1,000 worth of Bitcoin, then if let's say Bitcoin had gone up 20%, then the trader would have got $1,200 worth of Bitcoin, and that would mean he made a net of $200. Now, if let's say the trader was to borrow $2,000 from the broker and made the purchase of Bitcoins $2,000 plus his original capital of 1,000, that would be $3,000, assuming that the Bitcoin then went up 20%. So it would mean the trader would have made $600. Because of that additional investment of borrowed money of $2,000, the trader actually made $600 instead of $200. So, but of course, the trader would then, after the trade, return that $2,000 to the broker and also probably give some interest. But nevertheless, the trader actually made another extra $400 because of that leverage trading. However, similarly, if let's say the trade was a losing trade, okay, then the trader would be in hot soup because not only must he return that $2,000, the possible losses that the trader would have incurred would be a lot more as well. So the risk is actually higher. In essence, why does the Bitcoin exchanges want to suspend this margin trading? So from this example, it can be seen that the purpose of this suspension is to ensure that all traders are not over speculating in Bitcoin. So in a way, this is actually good news for the Bitcoin trading market, because with this suspension of margin trading, we would actually see a reduction in the volatility of the Bitcoin prices as a whole. After all, China's Bitcoin trading constitutes a large percent of the Bitcoin global price. Okay, so that's for this news on the suspension of the margin trading. What we will do now is to go through the Bitcoin prices for today. So let's look at the Bitcoin price chart that we have today. Currently, the price is at 891 at this point of time. As far as trends concerned, I have my moving average lines and my momentum indicators. That's the signal that we have for today. As far as support and resistance levels, let me zoom this in. Okay, there is a light support at around 850 region. In fact, there is a stronger support over at around the 830 level. However, as far as resistance is concerned, if you are to look at the queue of sellers that we have at Bitstamp, the sellers gradient above 900 is pretty steep as compared to the buyer's slope is actually quite shallow. However, if let's say this 950 resistance is actually broken, then there may be a light dash up further to $1,000. So that's all I will be sharing today. Now, if it's the first time for you to watch my videos, do subscribe to my video channel. And if let's say you want to receive more accurate Bitcoin trading signals, do let me know. So I'll catch you later. Thanks. Bye.